I want to quickly talk to you about PenFed loans and lines of credit. How do you get approved for multiple loans? Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sturdy Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about how to get approved for multiple PenFed loans. The first thing you need to do is to understand the loan typology at PenFed. Right off the bat, I want to say that PenFed is a great credit union. It is one of the largest federal credit unions based on assets and membership. Okay, this institution has a rich history of serving members of the armed forces, those affiliated with the military, and employees of the federal government. However, in the last few years, you don't need military affiliation to become a PenFed member or get a loan anymore. Okay, everybody can apply, and PenFed has members in all 50 states, the District of Columbia, and several U.S. territories. So this is actually a great credit union. And money. Let's talk about money. What do we like when it comes to PenFed loans and lines of credit? Their loans and lines of credit have some of the lowest APRs in the nation. No question about it. And we have reviewed hundreds of loans and credit cards and lines of credits on this show. And PenFed's loans and credit card and PenFed's loans and lines of credit have some of the lowest APRs in the nation. And their loan approval process is very swift, and loan reps are there to assist you all the way to approval. So this is kind of good. You have to think about that, okay? And besides, they have great checking and savings products. Okay, you can see some of the top tier APYs when we talk about online savings account, and we love the fact that their checking or savings accounts can be opened with a low minimum deposits. There are a few things that we don't like with PenFed when it comes to loans. In some cases, first of all, they don't have a lot of branches. So if you are if you're not, let's say, they're a network of nearly 50 to 60 branches extends across just 13 states. So if you have a need to talk to someone before applying for a loan and you're not in a state where they have a branch, this could be a problem. But honestly, you can also call, okay? And another thing we don't like when it comes to the loans and lines of credit is that it is difficult to raise the limit. In other words, it is difficult to apply for multiple loans and lines of credit if you don't know how to play the game. And this is what I want to explain to you in today's conversation. So speaking about loan typology, first, PenFed offers a personal loan. So the personal loan, you have the loan, the amount goes all the way to $50,000. There is no early payoff penalty, no origination fee, no hidden fees, and the terms up to 60 months, okay? $50,000 up to 60 months, and the APR can go as low as 4.99%. This is really good. Big decision time. I want you to talk to me. Are you interested in this loan? If you are, the cool thing is you can actually be pre-approved. In other words, they will send you one or multiple pre-approved offers, and you can actually choose. You can check your rate without affecting your credit score. So this is really good. Besides the personal loan, you have the personal line of credit, and here you have a fixed rate as low as 5.99% APR, credit lines up to $25,000. Okay, you get free checks to access your line at any time, and we love the fact that with this personal line of credit, you can use the funds when you need them, anytime, for anything you want. Payments based on an amount. The payments will be based on the amount you actually use, not on the amount of your line of credit. Okay, so this is kind of similar to a credit card if you think about it. You also have auto loans with PenFed. And those are great. You have loans at loan amounts that go all the way to $100,000 up to 125% financing. Rates as low as 0.99% APR up to 36 months, and you can get pre-approved This is kind of cool. So you know what you qualify for before you buy. This is really good. You also have a HELOC with a PenFed. So this is the PenFed Home Equity Line of Credit. Here you have rates as low as 3.75%, and the APR can go as low as 0.99% for the first 6 months. So you can use the money for home improvements, debt consolidation, pay off student loans, all that kind of stuff. You also have PenFed does also offer mortgages, of course, for first-time home buyers or existing home buyers. This is kind of good. So they offer the Power Buyer loan, the VA loan. They have the VA Streamline, the IRRL. They have conventional fixed loans, refinancing, jumbo loans, and adjustable rate mortgage. What I'm trying to say here is that you need to understand the types of loans and lines of credit that PenFed offers in order to know exactly how to apply for multiple loans and lines of credit. Step number 2, I want you to plan. So when we talk about planning, we are thinking about being very strategic about what kind of loans you want to go after. This is important. So you want to think about, so I've given you all the different types of loans and lines of credit that they offer, but you need to make a decision about which one specifically you want to go after. You also need to think about how much you can afford. Okay, it's not just about sitting here and say, you know what, I want this. This ain't no candy store. No, you have to choose exactly which one you want to go after and how much you can afford. It's all about being able to make sure that you have the proper income to repay the loan, right? What is your income and overall financial situation? Talk to me about money. Money. Talk to me about your financial situation. Is cash tight right now in your household, or cash is flowing? Talk to me about that. One thing you need to understand is that there is no limit on how many loans you can apply for, but PenFed will be gauging your risk profile before approving you. Okay, they will be thinking, what is our overall lender exposure to this applicant? In other words, how much in outstanding debt do you have as a borrower? And don't forget credit card balances when we talk about doing the planning and gauging your overall borrower exposure vis-a-vis PenFed. They're not just thinking about loans and lines of credit. They're also considering credit card balances, not just the unpaid balances. They also think about the whole limits that you have. Okay, so a credit card limit is the true exposure PenFed has vis-a-vis you. So what I'm trying to say here is that you have to be very strategic. In our view, and based on our research and based on the advice we have given to folks in the last 15 to 20 years, realistically, you can apply for 3 PenFed loans within 3 to 6 months and get approved for all these loans if you are able to meet all the other requirements that I'll be talking about, including your DTI, your BSI, your 5Cs, and MPR. For example, we have advised folks who successfully applied for a personal loan, a personal line of credit or HELOC, and a car loan. Or you can try to apply for a personal loan, a mortgage, and an auto loan. In addition, of course, to PenFed credit cards that you currently have. Step number 3. If you're trying to be approved for multiple loans and lines of credit with PenFed, you want to think about timing. Timing is so important, folks. Timing is everything. You can apply and get approved. You can apply for and get approved for 3 loans within 3 to 6 months. But don't try more funding programs within that time frame. Don't try to go for 4 loans or 5 loans. This will not work. PenFed will look at you as a risk magnet, if you will. They will start paying attention to your default risk. So you don't want that. Timing plays a key role because it has to do with your credit score. Obviously, you want to apply when your credit score is healthy. You don't want to apply when your credit score is in the basement. Nobody wants that. Okay, you want to check your credit score, make sure that everything is fine. Timing also is important because it has a relationship to your DTI, your debt to income ratio. Obviously, debt to income ratio means that you are actually taking how much money you allocate from your income to debt servicing. In other words, this is a fraction. So you put on top the numerator, you will put your debt servicing amount. So how much you allocate every month to paying your debt. And at the bottom, the denominator, you have to put your gross income. For example, if you have, let's say you are making $10,000 a month and you allocate from that amount $2,500 to service the debt, your DTI will be 25%. $2,500 divided by $10,000. And you also have to think about your CUR, your credit utilization ratio. Credit card, credit card, credit card again, right? So when we talk about timing, we are paying attention to making sure that you apply when your CUR is as low as possible. So CUR, PenFed will be looking at your CUR when deciding whether to approve you or deny you for a loan or line of credit. This is important. And timing plays a quintessential role because it has to do with your income. Are you currently making money? Are you currently in a position, in a job where the income is good? Have you been recently promoted? Have you received a bonus recently? All of these things are important to boost your liquidity. And timing is also important because it has to do with the tenor of the different loans and lines of credit you're seeking. Okay, so when we talk about tenor, we're talking about term. So, okay, the loan term. All right, so this is really, really important. I'll be right back right after this. Don't go anywhere. The fourth step, you need to understand what we call the 5 C's of credit. Those are so quintessential, really. You need to familiarize yourself. I'm not just saying, like, I want you right now to take some notes. It's important. So the next time you walk to a PenFed branch or a Navy Fed or the branch of any financial institution for that matter, you want to be confident. You want to be unstoppable. And being unstoppable means you need to understand what the 5 C's mean. Okay? Big decision time. Big decision time. Are you ready? I want you to write down right now. The first C, capacity. Capacity means that you are able to repay the loan. That's all it is. You can afford the loan. Number 2, capital. So this is basically you have to put some cash in PenFed bank account or PenFed savings account, checking account, retirement account. Do you have the capital? Do you have the cash flow to make sure that you are able to repay the loan? I spoke to you about DTI, right? So your DTI has to do with your capital. Do you have collateral? Because some loans will require collateral. For example, a car loan is by default collateralized, right? The vehicle will actually be the collateral. What are the conditions? So conditions means that you are in a sector. Let's say you are an engineer. Are engineers making money these days? This is important. And what is your character? So you have to think about your educational background, your experience, your professional experience, okay, the type of industry you're in. Maybe in some cases you might want to look at your CV. They might want to ask for your resume, all that kind of stuff. So the 5 C's are important for a lot of things, but most importantly for money, how much you can be approved for when you apply for a business loan. So those are things you need to pay attention to, okay? So I want to make sure that you think about the 5 C's the next time you are walking into a PenFed branch, or the next time you pick up the phone and you want to request a loan from PenFed, you want to request a loan or line of credit, okay? So PenFed is not just going to look at your credit score. They're going to pay attention to more criteria before approving you. You also want to think about NPR. We talk about NPR on this show all the time, and I want to say that NPR means multi-product relationship. This is an internal criterion that we use for our research. Recently, we have heard on YouTube people using the NPR. They don't understand it. They talk about they include in the NPR all accounts that you have with the PenFed. When we talk about NPR, we are talking about asset accounts, not liability accounts. So when you want to determine the strength of your banking relationship with PenFed, you need to pay attention to asset accounts in which the money is yours, not loans or credit cards. No. So you have to open checking accounts with PenFed, for example. They have the free checking accounts, the Access America checking accounts, and in terms of savings account. Now, are you listening? Are you interested right now in a savings account? Big decision time, because we love the constellation of products that PenFed offers when it comes to savings accounts. So they have premium online savings, they have regular savings, they have money market savings. Okay, so those are good. They also have certificates of deposit, of course. They have the money market certificates. They have the Coverdale education certificates that you can be interested in. Okay, and they also have IRAs, individual retirement accounts. They have IRA certificates, IRA Premier, IRA savings accounts. So what I'm trying to say here is that if your goal rather is to be approved for multiple loans and lines of credit with PenFed, you need to establish a strong relationship with the credit union. They're going to look at your balance sheet. They're going to look at the amount of cash flows that you bring in, your cash inflows and cash outflows, before deciding whether or not you are eligible for the loans and lines of credits you apply for. I'll explain this to you. I'll explain this at length in a minute, but I just want to say that. And one thing you also need to do is that you have to think about the history of their relationship with them. What I'm trying to say is, don't just open an account like 3 months and then after 3 months you want to get a loan and a line of credit. No, it takes time. You want to wait for 6 or 9 months, and you want to really fund those accounts. Okay, there has to be money in the accounts. I want to quickly talk about DTI. I was mentioning that before, but I really want to dig a little deeper here. If your job and your goal is to get multiple PenFed loans and lines of credit, you need to pay attention. You need to pay special attention to your DTI and good debt to income ratio. A few minutes ago, I gave you sort of an example, but now I really want to dig a little deeper. You have to understand that in addition to your credit score, your DTI is an important part of your overall financial health, and the PenFed underwriters will pay attention to your DTI as they will just like be as thorough as possible. So calculating your DTI may help you determine how comfortable you are with your current debt, and also decide whether applying for credit is the right choice for you. What I'm trying to say here is that if you're already over indebted, let's say you have so much that you can't even breathe, why are you looking for extra debt? This could be a sign of financial despair or financial chaos. You don't want that. So when you apply for credit, PenFed will evaluate your DTI to help determine the risk associated with you taking on another payment. Okay, they're just trying to cover their ass, and that makes sense. They're a lender. They have to constantly evaluate default risk. They have to constantly evaluate credit risk. This is important. So you want to be very careful here. Big decision time. Talk to me about your DTI. What is your DTI? What is right now is your DTI increasing or decreasing? You definitely want your DTI to go down, right? This is important. And I showed you before how to calculate your DTI. The numerator is your debt servicing amount, and the denominator of that fraction is your gross income, not net gross income. So you definitely want to have a DTI that is 35% or less. PenFed loves when people have DTIs around 25 to 30%. So this is really good, because relative to your income, your debt is at a manageable level. But if you have a 36 to 49% when it comes to a DTI, here you have an opportunity to improve, and PenFed might start looking at you as risky. And if you have a 50% or more in DTI, you have limited funds to save or spend, and at that level they're not going to approve you. They were not. So if you want to be approved for multiple loans and lines of credit with PenFed, you definitely want to have a DTI that is below 30%. And number 7, you need to think about your BSI. And BSI is another concept that we use internally when we do our analysis, when we provide guidance to our clients, business clients, individual clients. BSI for us, and this is not a term you will see on the internet. This is our own criterion that we use internally, and we have used this for many years. BSI stands for your balance sheet index, and basically, if you have a strong MPR with PenFed, that means you keep most of your money with them, right? Money. In other words, they basically can see your cash inflows and cash outflows. So what PenFed will do is they will simulate your net worth based on the assets you currently have with them, and they will contrast that to your current liabilities, as well as how much your net worth could be. So net worth means what? You are taking your total assets minus your total liabilities. Obviously, PenFed does not have they don't have a total picture of your financial life, but they will construct their net worth based on the little information that they have about your cash inflows and cash outflows. Very important. So when you think about BSI is linked to DTI and CUR. Your balance sheet index is linked to your debt to income ratio and your credit utilization ratio. So the way we think about BSI, our formula for BSI is your total balance sheet ratio. That is your liquidity coverage. That is your total assets divided by your total liabilities. So if you have a BSI of 50% minimum, that's very good. That means that for every dollar you borrow, you currently have 50 cents to cover it. So remember the word currently. That is, you have the assets now, not later. Okay? So there is a strong relationship between DTI and BSI. So if you have, for example, if your goal is to be approved for multiple PenFed loans and lines of credit, you have a bigger chance. If you have, let's say, for example, you have a 50% BSI and or a 30 to 35% DTI. Okay. For example, if the cumulative amount of loans you're applying for, let's say within 6 months is $100,000, and you have at least 50K in monetizable assets and a DTI of 35,000 or less, you will be approved. So those are things you need to think about. You need to think about your CUR. You need to think about your BSI. You need to think about your DTI. Thank you so much, folks, for your attention to this conversation. I was talking to you about how to get approved for multiple PenFed loans and lines of credit. So you have a few steps you need to follow. Number one, know the loan typology. You want to know the different loans that PenFed has. Number two, you need to plan. Number three, you need to think about timing. Number four, please understand the 5 C's. Very important. Number 5, you need to think about establishing an MPR with PenFed, a multi-product relationship with them. Number 6, think about your DTI, your debt to income ratio. Number 7, think about your BSI, your balance sheet index. Thank you so much. God bless. I'll see you next time. But until then, remember, stay marvelous.